New Zealand's Reserve Bank today continued to raise interest rates aggressively despite the lead from our RBA yesterday, easing with the 0.5% rate rises back to 0.25%. Let's bring in Ross Greenwood, our business editor. Ross, New Zealand also started raising rates earlier, didn't they? What do you read into this, Ross?
Well, what you can read into it is that New Zealand is determined to crush inflation. So even in its board meeting today, and I think we've got a statement here for you, it basically indicated that it was prepared to go harder than even the 0.5% rate rise. So it said that the committee considered whether to increase the over-the-counter rate, its cash rate if you like, by 50 or even 75 basis points at this meeting. Now, that particular statement there shows how determined New Zealand is. Remember that New Zealand started raising interest rates more than 6 months ahead of Australia. And then the second thing also, as you can see here, the rate rises are pretty aggressive. Started with a few 0.25% rate rises, now has got a cash rate out at 3.5%, with many economists now saying it will peak around 4.25% somewhere early next year. So there are more rate rises ahead of it. Now, already in New Zealand, there are significant home price falls that have taken place. And really, it's a situation whereby New Zealand has said, despite Australia yesterday and the Reserve Bank of Australia being the first of the major central banks in the Western world to really sort of ease off on these 0.5% rate rises. The big one's going to be to watch the US Federal Reserve and whether it also eases off at its next meeting.
Ross, what did the impact of that move look like on the markets?
Well, the one thing I want to show you is the Australian dollar versus the Kiwi dollar, right? The New Zealand dollar. And here it's pretty obvious what took place. You can see there are two blips downwards on this chart, one in the middle. That's 2:30 yesterday our time when the decision came out of the Reserve Bank here in Australia. Less than expected. The Australian dollar, you can see, dropped sharply there against the New Zealand currency. It continued down. Then when New Zealand again announced its 0.5% rate rise today, there was again another sharp fall in the Australian dollar versus the New Zealand dollar. So this is all about the parity of the currencies, the parity of the interest rates, and that's what takes place. So again, sharp movements in certainly the currency markets, but then on the share market, a totally different tale. As a result of the fall yesterday, look here, the Australian share market today is up and up very strongly, up almost 1.75% after being up almost 3.5% yesterday. These are big gains. So it's the banking shares, it's the technology sector. These are all major beneficiaries if the Reserve Bank here in Australia does not raise interest rates as aggressively as the market had previously imagined.
I know there's been a lot of delays for people trying to get new cars into the place, supply chain issues and so on, but the car sales overall, they're up sharply.
They are. And in fact, this is one sign that A, there are more cars getting into the country, that supply chains are now starting to ease up. But the second factor also is there's that demand. Now, this should potentially give pause for thought for the Reserve Bank, because if people are still out there buying cars aggressively, in the past month, September, sales were up 12.5% compared with the same month last year. Overall, they're very, very strong. And guess what is the strong seller right now? Electric vehicles. So Tesla has now become the 7th largest selling brand in Australia. Here's the top brands. You can see Toyota clearly the top selling brand in the country. But just outside of this list, Tesla suddenly jumps up and it's had significant sales growth. The second thing also, the best selling cars in Australia, you can see here, still dominated by the Toyota and indeed by the Utes, very much the thing. But look at Tesla there. The Model Y, the affordable car, suddenly jumps into third place on this particular list. It's just fascinating to see that the change is starting to occur in regards to electric vehicles.
Indeed. Ross, thank you for that.